Hi CA students, let's revise CA Final AFM Chapter 3 Advanced Capital Budgeting Decisions Illustration 11. So this is a decision tree analysis question. Let's dive into the question. L&R Limited wishes to develop new virus cleaner software. The cost of the pilot project would be 2,40,000. So in case of decision tree analysis question, we have to mark where and when we are taking decision. So the first step comes with L&R wishes to develop a new software. This itself is a decision. Whether to develop the software or not itself is a decision. Then once if they proceed with developing the software, then the cost would be 2,40,000. Then presently the chances of the product being successfully launched on a commercial scale are at 50%. So after the probability of 50% has to be considered after the decision of developing the software is taken. So once we wish to develop, then we are taking the probability of the success of the project. For success it is 50% and the failure also it is 50%. L&R can invest a sum of 20 lakhs. So here it says in case it does succeed, L&R can invest a sum of 20 lakhs. So here again the decision will come once the project is succeeded. So here they mention L&R can invest. So here also we have an option of either investing or not investing of the 20 lakhs. Once the project is successful and if we invest an amount of 20 lakhs to market the product, such an effort can generate perpetually an annual net after tax cash income of 4 lakhs. So here they are saying it will generate a perpetual cash flow of 4 lakhs. So here also as previously told, we have based on this income we have to decide whether we will invest 20 lakhs or not. Then even if the commercial launch fails, now going one step ahead, here we checked if it succeed I can invest or not. In the second case, if it fails, so this is also one decision. If it fails, then they can make an investment of smaller amount of 12 lakh with the hope of gaining perpetually sum of 1 lakh. So considering this 1 lakh, we have to check whether it is profitable or not, and here also one decision is involved where they can make an investment. So this is also one decision making point where either I will invest 12 lakh or not. Evaluate the proposal adopting decision tree approach. They've given a discount rate of 10%. So where and all we are making decision, first place is L&R wishes to develop a software. That is one decision. After L&R, if it invests, then it will succeed or not succeed. If it succeed, again there is an option of investing 20 lakh or not. And then if it fails, again there is an option of investing 12 lakh or not. Now let's see how we are going further. As we can see in the question, in case of decision tree approach sums, always we have to prepare this diagram wherein first we have to start with the first decision of developing a software or not. In this case they have mentioned as test, which is taking up the test or no test. Test in the sense developing, because before developing a software or any kind of project we will test it, right? So testing 2,40,000. After testing I have an either I will succeed in the project or fail in the project. In case if I succeed, the probability of 50% they mentioned here. In case if I succeed, again there is a decision of either investing in 20 lakh and getting 4 lakh perpetually or not investing. And in case of failure, again I have an option of investing in 12 lakh and getting in 1 lakh perpetually or not. Now going up here, I have to evaluate I have to evaluate whether how will I whether should I invest or not in both the scenarios. How will I check that? Since they have given 10 percentage as the discount rate, I will check 4 lakh divided by 10 percentage, wherein I will get 40 lakhs and the investment is 20 lakhs. So I will get a net benefit of 20 lakh. So at this point of time, I will obviously invest because I have a if I invest, I'll get 20 lakh net gain. Obviously, I will not choose the second option. In the second scenario, in case of failure, I will get 1 lakh perpetually, right? So 1 lakh divided by 10 percentage, I will get 10 lakh. But I am investing 12 lakh, right? Wherein I am getting a 2 lakh loss. So nobody will invest in a project where it is fetching me loss, right? So in this case I will choose this option. In this case I will choose investing option. Now considering this, we'll go to the decision points. Now on the first evaluation, as we are going from point C, as per our thing, we will invest in 20 lakhs. The same they have given here. The preferred choice is to invest as it is giving an yield of 20 lakhs. And in case of at point D, decision point D, we will not invest as it is giving a net loss. Same they have given there, it will not be prudent to invest. Now this is the final part at decision point C and D. Now we have to go one step behind and check the decision point B. At decision point B, I have two outcomes. One is success and one is failure. Both have a probability of 50%. So obviously we have to check the probabilities here. First option, I am getting 20 lakhs as my net benefit, and in failure I am getting 0. Why 0? Because I have chose not to invest. Because if I invest, obviously I'll get a loss. So I'll not invest. So there is no outcome. That's why it is 0 here. And then the probability is 50%. So my net expected result is 10 lakh. 10 lakhs in lakhs only. 10 lakhs is my net expected return. Now we will use the term of EMV, which is expected monetary value. So in case of at outcome point B, I am getting a EMV of 10 lakhs. Now going one step further back at point A, whether I should develop this software or not. I should spend this 2,40,000 to develop or not doing it. So here we have to it is based on company's risk perspectives. As we can see, the outcome is 10 lakhs. We have to evaluate whether by investing 2,40,000 is the 10 lakh benefit worth for me or not, right? So it depends on the entity to entity. In ICAI they've given an answer like this. At A, decision is to be taken based on preferences between two alternatives. The first is to test by investing 2,40,000 and reap a benefit of 10 lakhs. The second is not to invest and thereby losing the opportunity of possible gain. So they have used this term, losing the opportunity of possible gain. Since they are telling by investing 2,40,000, I might get a gain of 10 lakhs, right? So in that way they are considering, and then they are telling the preferred option is to invest 2,40,000 and undertaking the test. It is always to go with ICAI solution, but as far as my opinion, it is up to the company. They have to decide whether by investing 2,40,000 is the 10 lakh benefit worth. What if they have an opportunity wherein they can by investing 2,40,000, if they are getting 15 lakhs as net benefit, so obviously they will not go for this test, right? So it depends on entity to entity, but ICAI solution is taking the stand that but we will not lose the opportunity of possible gain. So they are preferring the option of choosing investing in 2,50,000 and undertaking the test. Thank you.